Hayden Atkins, precious metals analyst at Macquarie Bank, joins us in the studio now. Hayden, thanks very much indeed for coming in. So you think that gold, when it comes to gold prices, the downside risk is pretty minimal?
Yeah, it's fairly minimal and hard to be bearish in these kinds of markets as well, particularly in the short term. I think, though, there is a question how high it's going to go, given it's pegged to different trades like lower real interest rates. They're incredibly low at the moment. How much lower can they actually go? Or the Swiss franc as well. So markets are going to have to ask a few questions, relating to those kinds of trades of how high gold can actually go.
So how high could we see prices go? I mean, a lot of analysts and investors are actually saying that it does have potential to move substantially higher compared to where we are now.
I think that's a fair assessment. I think somewhere in the vicinity of 10–15%, in these kinds of markets does make sense. Over what kind of time horizon is kind of hard to say. But I think there are more questions that you have to ask of whether gold is a one-way bet going forward. I think some traders are going to be looking at things like the Swiss franc and real interest rates, questioning how much lower they can actually go.
Yeah, because I mean, gold has moved with the Swiss franc, hasn't it? So there is a question about how much longer people will actually stick to that sort of trade.
Exactly. I mean, gold can break out of these trades very easily and has done in the past. It's by no means continuously pegged to these kinds of things. But it does, at least raise a question mark rather than, just a one-way bet.
Yeah, I mean, we're above the 1770 mark right now. Could we go as far as 1800, 1900?
Yeah, somewhere between $1,850 and $2,000 an ounce is, I think, fair in this kind of environment.
And what might prevent the rally, or what might stop gold from climbing the way it has?
Yeah, I think either policy action to stabilise what's going on in debt markets, and better news on growth, I think, is the key thing for most markets. If we see some of the leading indicators even stabilising, I think people will have to reassess the path for growth going forward.
I mean, do you think that that could be a possibility, given that we've seen the price of oil coming down a bit, so people saying that could give consumers a little bit of breathing room, perhaps the impact from the supply chain disruption from Japan's earthquake also subsiding a little bit, perhaps increases the potential for US growth at least sometime this year? Yeah,
I mean, that may take a few months. It's not going to happen instantaneously. So I think some of the partial leading indicators haven't been, completely terrible in the last, couple of months or so. So, yeah.
And I'm also wondering, what other precious metals do you think, what else are you looking at right now?
Well, we have seen a big shift in the relative valuations in precious metals over particularly the last couple of days. So the gold-silver ratio, for example, has shifted quite a bit. We wouldn't suggest going out and buying silver today at around $39 an ounce, I think it is at the moment. It still looks incredibly high.
Yeah. But why has silver fallen back?
I think people are unsure of how to trade it in this kind of environment. It does have sort of a monetary kind of aspect to it, but also an industrial aspect. And if people are worried about growth, then that may raise some questions about demand for silver for things like electronics going forward. So I think there's a bit of uncertainty around that trade at very high silver prices as well.
And what about other metals? Talk to me a little bit about copper. Can we continue to see strong demand from emerging markets?
Yeah. I think in the precious metal space, platinum is quite interesting. We've seen the gold-platinum ratio fall below 1. I think we only saw that very briefly in the bottom of the financial crisis. So there's somewhere where there could be quite a bit of value. I think on the base metals, we're certainly continuously positive on things like copper. I think the big question is when China comes back in to stabilise these markets. We certainly haven't seen that yet, and may not happen for a couple of months. But we're still bullish on the outlook for China, and certainly think that at low prices they will come in and counter-cyclically balance out some of the base metals markets.
Okay, good to talk to you, Hayden Atkins of Macquarie Bank.